Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently trading at 48,772, down 0.35%. Ethereum 3985, down 0.89%. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Around this time of year can be a very joyous and happy time for many people, but unfortunately some people are going through quite severe life pullbacks. If you're going through a hard time, please know our love and healing thoughts are with you. You're not alone. The sun will come out again, and there's always hope. Rule 774, master yourself to master the market. Self-mastery is all about creating inner and outer peace through a foundation of integrity, decency, and kindness. That takes a lot of courage and honor to do. To create a positive excellence life trend, we focus on real wealth. Real wealth is much more than money. Money, of course, is security and incredibly important, but without the components of real wealth, money is very meaningless. As countless people have found, money without meaning is simply another form of poverty. Professional traders and professional investors become that way because they fight self-sabotage and self-doubt, which is very insidious. You don't know it's occurring. One fundamental way to fight these dual enemies is to understand how worthy and unique you are. Your uniqueness makes you worthy by default. You don't have to do anything. You are already worthy. You don't have to achieve a goal or an aim. You are already worthy and deserving of kindness, love, meaning, and every success in life, both financial and in terms of real wealth. Rule 138, all investors become traders every time they buy or sell. The investor mindset and the trader mindset are only different in terms of what they do after they buy or what they do after they sell, but both groups buy and sell. The unfortunate thing with crypto, due to its incredible volatility, is if investors buy at the right time, they can get locked into a loss position. Traders, when they buy, they have to be very precise. Being an investor with a trader's mindset is incredibly sensible. A lot of new investors and traders look at the crypto space and see all these incredible percentages and just say, it's a license to print money. I don't have to know what I'm doing. I can just buy anything and it will go up. Anybody who's been in the crypto space for some time knows that that is simply not the case. You have to pick well, and you have to pick at the right time. At the request of the community, I created the CryptoTradingKS Masterclass. What it's all about is I want to enable you to do what I do by transferring my knowledge so that you can become more of a financial blessing to yourself and those you love. It's really all about passing on what I've learned over my 30 plus years in financial markets. As a former lecturer in first and second year statistics, I realized that it's really important that people have the right foundations. If they don't have the right foundations, they can't understand higher levels. That means that anybody who skips particular lessons, misses the foundations, will not be able to understand or fully apply the concept that they learn later. This is in every field of study. That's why I have time released all the different areas. Foundations creates new ways of looking at the market. Trend is where are things going. Timing is creating a short list. Real wealth is all about gearing your psychological infrastructure towards wealth and actually making sure self-sabotage and self-doubt don't destroy your portfolio. Trigger is all about when to buy and sell. And I share many rules across all of these processes, and because they're time released, you can focus at your leisure and make sure that you understand each area as you go. I'd just like to let you know that on the 31st of December, the Foundation member discount will end. That's the 90% off discount. I sent emails out on the 11th of December, and that was episode 365. If you've missed your discount, please email me at kstandf@gmail.com. Just like to give you a little bit of feedback. Travis wrote an incredible message to me, and he just wanted me to share it, even though it was private message. People understand I never share private messages. Travis said, I just want to reach out and say deep thank you for the masterclass, Ken. The knowledge within has brought me a whole new life of excitement, courage, and confidence to the process of trading. And I thought it was fun before. It's been so profitable that in the first week I've already made back the cost of the course and then some. One thing that I want to just explain, I don't package the masterclass, for example, on the returns that it can make. That is immaterial. What is material is that you gain the skills that you can look at the market from a completely different perspective. I would never promise a certain percentage. What it really comes down to is the psychology that you have with you. For example, you can know all these things but fail on real wealth, and that can create a trigger process that will not work for you. That's why I put real wealth before trigger. Travis said, I've been telling everyone I know to get on board because not only what you teach, but more importantly, how you teach it is absolutely worth its weight in gold. Thank you, Travis. Please let everyone know that they absolutely must sign up to this if they're looking to expand their profitability and wisdom in the world of crypto trading. You're welcome to share everything I've said here, even though it's a private message. Thank you, Travis. Very kind of you, my friend. Gabskar said, thanks for everything you do, Ken. We all came here looking to make money, but found so much more. I'm learning so much from the masterclass. I thought I had a good foundation, but I was wrong. I recommend the course, to do the course if you can afford it. The price is well worth it. The masterclass is all about creating intergenerational wealth and being more of a financial blessing in your lives and in the lives of those you love. Flamingo reached out and said she was starting the masterclass today. Besides the knowledge that I and my husband will gain, I want to pass this knowledge on to my children, age 22 and 18. That is so absolutely beautiful. That is what the masterclass is all about. Flamingo says, thank you for the discount because I know that your class is worth what your class is worth and will sell for full price once the discount ends. Please lock in your foundation membership status. This is really, really important, and I'll explain to the foundation members next year just how important it is. That comes with a 90% off discount, but it will close up on the 31st of December. You just have to reach out to kstandf@gmail.com. Rule 45, no alt can escape Bitcoin's gravity. This is an incredibly important rule. Why do we need to look at Bitcoin? Because Bitcoin actually governs the directional movement of your alts. If Bitcoin is coming down like this, for example, 99% of the alts will come down with it. There are always 1% of alts that don't behave in the directional bias of Bitcoin at any particular time, but you've got a 99% probability that it actually does. So we need to pay attention. Why is that? Because not only does Bitcoin's gravity eventually pull the alts into line, the thing is that the gearing between Bitcoin's price reduction or price improvement is differently weighted on different alts. We can see Bitcoin coming down by 5%, but your alt could come down by 15 or even 20%. You really, really need to look at Bitcoin. It's critically important. So let's have a look at what we're looking at here. Bitcoin is currently trading at 48,688. We're above this level of resistance that Bitcoin was under for quite some period of time. What is happening right now? We can see another level of resistance playing out here. I'll just make that a little bit more bold for you. There you go. So this secondary level of resistance, price is coming up to that. Now, what are these three colors? This is all about KS3 color analysis. It's just something that I invented because I wanted to help people understand the directional bias, where price was going. So many times people just expect, say for example, price is going to go up or it's going to go down. Having this three color analysis really is a game changer. That actually is, the three color analysis is all about making in advance probabilistic choices. The green areas are if it goes up in price, the red areas are if it goes down, and the gray area if it goes sideways, if it can't figure out what it's doing. The masterclass does deep dives on everything that we go through and many things that we don't go through in the public channel because they require so much foundation. What we see here at the moment, let me just zoom in there for you. We can see that there's been a lot of selling at that 49,305 mark. Bitcoin is currently in the I don't know what I'm doing area, but it's literally coming up to a level of resistance. We've got a bit of negative air here. That means there's high sell pressure on these resistance lines. This resistance line playing here. We've also got a cradling of negative resistance. We need to pay attention to this because Bitcoin doesn't know where it's going at the current time. We always have three strategies in play. That is why we make these in advance probabilistic choices. You will know what you will do if, for example, crypto breaks through its resistance and goes bananas, goes parabolic. You will know if it breaks through its support, what it will do, and if it just keeps on going sideways, what it will do. The unfortunate thing is so many influencers always just nail into one probability. It must go up or it must go down. This is not professional trading and investing. Professional traders and investors, the institutional mindset is always multi-dimensional. It covers off these three probabilities. We're seeing a rejection here of this particular support line. We could potentially come down and retest this lower support line at around 47,109. We could then potentially try to attack this resistance line again. Sometimes price just needs to get an accumulation of power to actually break through. Then we have a secondary resistance line here. That's why the first starting point of the green box is up there. Professional traders and professional investors always move with the market. They don't care about what they think the market should be doing. They move with what the market is actually doing. So we literally need to check more closely into what the market is actually doing. So let's check the fear and greed index. We can see there's been an uptick in the amount of optimism in the market. Using the specific methods, you can see that we've actually broken a level of resistance in terms of optimistic behavior. It's going up. Optimism is returning to the market. But always remember, price and optimism and pessimism, they move in waves. They're never all up and they're never all down. They're always moving in a wave. If we have a look at the RSI, the relative strength, we can see that the relative strength is increasing in the market. We're getting an uptick. We're also getting a pass across resistance. This is confirming what we're seeing with the level of optimism in the market. We could very well break out from that resistance, but please be aware of something that I call technical violations. Institutions love to do technical violations. They will literally pull the rug out from underneath people's feet and sell off to just immediately buy back and rally through. The institutions are always hunting stops. They're always hunting leverage traders. They make their money from leverage traders and they have infinite amounts of money. If you're leveraged, please be careful. And I would imagine you're only doing it because you're consistently profitable anyway. If you're not consistently profitable, if you're looking at leverage because you've been called in by some, get $2,000, of free trading money. It's never free. What actually happens is those particular leverage trading platforms will wipe out your money. Please be careful. Rule 130, make volatility your best friend. When you're not trading under leverage, you can actually buy it at seriously low levels, because the volatility inside crypto is all about hunting stops, all about hunting the leverage traders. And then what happens is basically the leverage traders have to cover their positions either by buying or selling, and that creates huge spikes in the market. Looking back to the past bull run, the 2016 bull run, what we can see is enormous volatility in the market. 20, 40, 30% drawdowns, even 50%. You have to be prepared, mentally prepared for these drawdowns. Of course, the price increases are fantastic and we all love those. But the issue is, can you withstand psychologically the drawdowns? They happen all the time. You must have your mind pre-prepared. That's what Rule 130 is all about. Make volatility your best friend. Let's very quickly go through the major issues. For example, Mt. Gox, Omicron, India, Evergrande, tapering, inflation, and the rest. We can see that the Mt. Gox reserves have not moved. As we can see, Omicron is affecting all areas of the world, and especially the UK. Our hearts and love and thoughts go out to everyone in the UK. We can see massive increases also in Norway, Canada, the US. Let's just go down and check out what countries are being impacted currently. And we can see worldwide there's 121,474 cases confirmed. 3 days ago it was 20,000, so this thing is really kicking off. And we can see the stringency index, which is basically the closure. Germany is out in front. We can see that as time progresses, we may get more stringency, more lockdowns, more school closures, and etc. as we go through time. We have many members in the community going through COVID at the moment. I just want to reach out and say that all the community is thinking of you and wishing you get better soon. And to all those community members who've lost parents and loved ones, I just say, we're thinking of you, and we can't imagine the suffering and the loss you're experiencing at the moment. All behind numbers are real things, real people, and it's good to keep that in mind. Coronavirus cases throughout the world, nearly at 278 million and 5.4 million deaths. One potentially good thing is, even though we see the number of daily cases skyrocketing, the death rate is still low. We hope that continues. Looking at lockdowns throughout the world since January of 2020, we can see those lockdowns perpetuated around the world. Things got pretty tough in the first wave, then things lightened down, and of course we've had several more waves after this. We can see that the stringency has never really come off, and we're hoping, of course, that this latest outbreak doesn't lock the world down again. We're getting very high numbers at the present time, and we're seeing lockdowns occurring and quite an increase in numbers. From the probability of crypto side, what we're actually seeing is crypto rallied throughout this whole process because a lot of financial aid is required for people, and that inflates the money supply. In all probability, the central governments all around the world cannot do tapering, especially if the stringency index starts increasing again and lockdowns become common again. We always need to dig behind the news and the statistics to try and find out how the markets are actually reacting. If we see the airlines index in the transportation sector, we can see it staging a little bit of a recovery. That's really, really good. It's not above resistance yet, but it's certainly getting there. It hasn't confirmed. But some of these transport indexes are ticking up. This is a really good sign. When looking at inflation expectations over the next 5 years and 10 years, we can see we're also getting a bit of a tick up on that. We note that inflation expectations and Bitcoin have been very nicely correlated. I'd like to reach out to Lavin, who's been very kind and generous, just letting the community know what's happening on the ground in India. And so many wonderful community members reach out to me every day and share things about their country. I really, really appreciate it. Lavin just shared this: the winter session of Parliament likely concluded today. And the key is that crypto infrastructure, the crypto bill, if you like, was not in it. We would expect to see some kind of rally coming out of Bitcoin in the local Indian rupee, just like we had this particular massive sell-off when the concept of India banning crypto came out. We would want to see some positive uptick here. We're not seeing it just yet, but we'll keep our eye on it. The elephant in the room continues to be the Chinese property market. We can see that from these 7 companies, we have in excess of $1 trillion of net debt. Of course, the CCP, the Chinese Communist Party, will come in and rescue the local Chinese property market. It has to. But US denominated debt, the foreign debt holders, they're on their own. That's important to realize. The CCP will save the people, but it certainly won't save the international community. Let's just zoom down into this particular area so we can see what's happening with the different prices. We can see this is all about confidence. When you look at any specific chart, if it's going down, it means there is less and less confidence. If it comes up, there's more and more confidence. We're seeing potential crossovers in some of these Chinese property sector firms. Let's keep our eye on this. This could actually turn around, but Evergrande is looking very, very unwell. We also have to pay a lot of attention to the interplay between the risks of crypto stocks and bonds. Bonds are always seen as very low risk. If the market is going to sell off, we will see money coming out of the stock market and crypto going into the bond market, so that they basically lock money up and just get a coupon repayment. We can see back at the end of 2020, stock markets around the world, of which the US accounted for literally 56% of all stock market value, was around 95 trillion. The bond market 128. I'm just using crypto as 2 trillion to just make it easy. When people understand that crypto is not crypto, it's so funny. I read so many articles from the mainstream saying crypto will go to 10,000, says a professor of a particular prestigious university. That professor has no idea what crypto actually is. Crypto is the ownership layer of the next generation of the internet. This is the problem. People just don't know what crypto is. Back in 1993, I created an internet service provider. I provided dial-up access to thousands and thousands of customers in the dark days of the internet. Some very famous people, very professional people, said the internet was just a passing fad and millions would give up on it. Ooh-wee. The same thing is happening with Bitcoin. I've seen all this before and we're seeing it again. Literally, Bitcoin and crypto are the ownership layer of the new decentralized internet. A lot of very smart people don't understand this. I don't know why they don't. What does this mean? Over time, when people figure it out, especially the professors at university, they will look at it and say, oh my goodness, crypto is just like the old internet, that internet that we thought wouldn't make it. And it's now the ownership level. Oh, okay, so we buy the network. Therefore, stocks and bonds will naturally flow into this. This is the biggest revolution we've seen in our lifetime. If we thought the internet was big, crypto is 1,000 times bigger. I think one day we'll get so much absorption of the stock and the bond markets into crypto that people will not recognize this particular time in history. Also, the derivatives market is over $1,000 trillion. People just don't know how much money there is. So let's have a look at the stock market. We can see the fear coming out of the stock market. What does this mean? If the fear comes out, what do prices do? They go up, just like in the crypto market. We can see the NASDAQ 100 did that technical bounce from its support line and bounced up. It's got a lot of selling activity sitting above this particular level. We could expect it to hit this top and go down a bit on its way to gather momentum and strength to get through the next level. Just bear this in mind. We can see oil. Oil has come down, done a technical bounce, and actually gathered strength to shoot through that second level of resistance. That means that the probability of oil prices coming up is absolutely on the cards. Potentially better to look at yields, and we know that bond prices and yields move inversely. We can see that we've had a technical bounce just like before, and yields have come up. What does that mean to bond prices? They're coming down. This is a really good thing because we think fear is coming out of the market. Prices are improving. The risk appetite for bonds is decreasing. More money is flowing into the stock market. But we also note that gold, which is a geopolitically sensitive asset class, is starting to come up. There's a bit of turbulence in the world at the moment. What is that? It's the incidence of the Omicron cases and the probability that stringency will increase. So we need to keep our eye on this. You can see every piece of knowledge builds on every other piece of knowledge. It's so important to have all the foundations in play. The DXY, the Dixie, the US dollar currency index, has done that technical bounce from support and continues to shoot upwards. Just like in life, Rule 28, opportunities reset daily. When we look through the crypto market, each day we can say everything is just resetting because it does. Let's put everything together. When we look at Bitcoin's price, it's starting to just peak over its resistance. This is really, really tight resistance. We need tight resistance lines because crypto moves exponentially. It's not like the stock market and it's not like Forex. Crypto is on steroids. It's got steroid rage. When we look at this, what are we seeing? We're seeing, for example, that the Indian Parliament has said, okay, crypto's off the table. That is a really good positive thing for crypto. What else are we seeing? Stringency is starting to come back up as the number of cases throughout the world comes up. And we know that that's incredibly positive for Bitcoin and crypto because central banks will not be able to taper. If they taper, they're going to destroy or implode their economies, especially if they lock down again. They're in a very hard position, but it's very good for crypto. What we can see is this turning around. What does it mean for the other cryptos? Remember, no alt can escape Bitcoin's gravity. We can see Ethereum consolidating around support. What do we expect? As Bitcoin improves, we expect a bounce upwards from Ethereum. What about Binance Coin? Look at the strength. Very, very little sell-off in Binance Coin. We've been expecting and waiting for our 10-5-10 fund levels to fill, and Binance Coin says, no, I'm so strong, I'm not going down there. Naughty Binance Coin. So inconsiderate behavior. We can see Sol starting to turn around. And one thing with your 10-5-10 levels, you can always move a lower one up to a higher one. Just keep that in mind. As we go and price is increasing, we actually increase our lowest 10-5-10 level first, not the closer 10-5-10 fund level. We can see ADA, Cardano, starting to show a little bit of life here. It may make a play for this resistance around the 172 mark. That could be quite interesting. XRP looking terrific. Look at this, very big sign of strength here with XRP. And you can compare that to all the other cryptos. Have we seen that? No. XRP has done really, really well. DOT is starting to turn around as well. Now let's have a look at Luna. Luna has gone to the moon. I'm just going to explain, if you wanted to get into Luna, what could be a potential path. Many times people chase the price and buy at market. If you're buying at market, please don't do it. You're costing yourself a fortune. Over a lifetime, buying at market will absolutely wreck your profitability. Professionals never, ever, ever buy at market. There would be many people that would FOMO in to Luna at this particular time because it's come up 40%. That's very good. But price is always moving in a wave. It's always going up and down, up and down. It's come up 40%, but it's reduced nearly 14%. Please keep this in mind. That means the real increase is not 40 at the moment. The real increase, as soon as I grab this guy, the real increase is actually 22%. That is a very big difference. That's why professionals always layer their buys at levels of support. We can see a very good level of support at 75.33, just along this line. There's another very good level of support at 81.94. Professionals always spread the amount of money that they're going to put into any specific trade. And remember, all investors become traders anytime they buy or sell. They spread it around multiple levels. Why is that? Because professionals generally have a lot of money that they can throw at one particular trade. If they put too much money on, be it a sell or be it a buy, they will move the market. They have to split their levels up. That is why we always talk about layering. We can see that we've had quite a good, nice drop here. People, when they might trade, for example, Luna, could put a percentage in around the current price just to participate, but then dropping it down to levels of known support is very intelligent. And also dropping it under levels of support is really important. We can see that price can spike wildly. When it spikes wildly, for whatever reason, you want to be there to capture that move with your limit orders, waiting patiently in the market and letting price come to you. Don't chase price. Be cool. Let price come to you. That's very, very, very important. It's incredibly important to have a trading mindset, even if you're a 99% investor, because having the trading mindset will help you time your entries and your exits. That's all about Rule 138. All investors become traders every time they buy or sell. The Masterclass discount, the foundation member level, is closing off on the 31st of December. If you want to lock in that foundation member discount, please reach out and email me at kstandf@gmail.com. If you're going through a life pullback or someone you love is, remember the sun always comes out again, and our thoughts and healing prayers are with everybody during this time. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.